Good morning. Why 1031 exchange buyers are targeting Houston more than any other market in 2026. And Houston has quietly become the most strategic destination for 1031 exchange buyers in 26. While coastal markets wrestle with compressed yields, regulatory friction, and pricing stagnation, Houston offers something rare: yield, scale, population growth, and timing all in one market. And for investors racing against 1031 deadlines, Houston is no longer a secondary option. It's the primary target. And here's why. Number one is migration is rewriting the demand story. Houston continues to benefit from net in migration from high tax, high cost states like California, New York, and Illinois. And these buyers arrive with equity, with urgency, and a mandate to redeploy capital efficiently. And population growth fuels retail absorption, industrial demand, workforce housing needs, medical and professional office expansion. And for 1031 buyers, migration equals durable cash flow, not speculative appreciation. Number two is yield spread, still exist in Houston. In many primary metros, cap rates have compressed to the point where exchanges barely pencil. And Houston still offers meaningful yield spreads compared to the coastal gateway markets. And here's some insights into typical 2026 dynamics. So, Houston industrial, retail, and multifamily assets often trade 100 to 200 basis points higher than comparable assets in the California area or the Northeast. And there's strong rent growth that offsets financing costs. And the lower basis reduces your downside risk. And 1031 buyers are not chasing headlines, they're chasing spread and stability. Number three is tax timing forces decisive action. And the 1031 exchange clock doesn't pause for market uncertainty. And when you consider in these factors, timing is of the essence, is the larger point, but there's 45-day identification deadlines, there's 180-day closing windows, there's ongoing capital gains pressure, and with growing uncertainty around future tax policy. Now, Houston's deep inventory and transaction velocity make it one of the few markets where buyers can actually execute on time. And investors aren't just choosing Houston, they're choosing certainty of execution. Number four is the investor psychology has shifted post volatility. So, after years of rate shocks, volatility, and cap rate repricing, 1031 buyers in 2026 are more disciplined than ever. And they want predictable cash flow, conservative leverage, diverse tenant bases, and long term demographic support. And Houston checks every box of those. There's energy diversification, healthcare expansion, logistics growth, and infrastructure investment all have transformed Houston from a cyclical bet into a multi-pillar economy. Number five is Houston offers scale for exchange buyers. And 1031 buyers often need to consolidate smaller assets, trade up into multi-tenant properties, or deploy large amounts of equity efficiently. And Houston's size allows buyers to assemble portfolios, to diversify across submarkets, and to transition into institutional quality assets. And markets like Katy, Fulshire, Brookshire, and West Houston are all especially attractive for value-oriented exchange buyers who are seeking both yield and growth through appreciation. And final takeaway, in 2026, Houston isn't winning because it's just cheap. It's winning because it's a balanced overall market. And migration, yield spreads, tax pressure, and investor psychology are converging, and 1031 capital is following the path of least resistance and also the highest probability. So for exchange buyers, Houston is no longer a plan B, it's your first call. And that's it for the day. If you have any questions, please visit my website, HoustonRealEstateBrokerage.com. You can find out how to get a hold of me. Have a good day.